Hi, I am Vivek Rege, founder and CEO for VR Wealth Advisors Private Limited. Our firm got established in 2008, following which we took a SEBI license in 2013. So it's been more than 10 years now since we embraced the SEBI RIA regulations when they were introduced. So I'll just give a brief about how and what does SEBI RIA really means. So the fundamental point which SEBI wanted to kind of achieve was that there are a lot of investors who are looking at an independent advice. And when I say independent, it really means independent, which is in a fiduciary capacity. It's just like a doctor giving advice to a patient where the patient is paying the doctor. Similarly, no manufacturer pays us. The client will pay us a fee. That arrangement was very important in the eyes of SEBI because there are a lot of investors who are certainly looking for a very independent, unbiased advice. And that's where the RIA regulations were introduced back in 2013. So what does it essentially mean? It essentially means an advice which is given to an investor, which is essentially has also to be a one-on-one advice. And when I say one-on-one advice, there are a lot of advices which can be given as one-to-many. So typically those are termed as RA, which is research analysts. And this is the exact difference. When you give a one-on-one advice, it is an investment advisor. Whereas when you give a one-to-many, it is a research analyst. Many people get often confused between these two terms, right? Secondly, both the IA and the RA may have the same ingredient, which is a mutual fund. They may have a stock, they may have a security, which is a debt security on which they are doing analysis. However, the approach is very different because, as I said, it is one-on-one in case of an IA and one-to-many in case of an RA. So, as I mentioned, unlike distributors where a commission is paid, an IA will always get a check from the client directly. A conflict of interest has to be eliminated to a very large extent. And when I say that, there are possibilities where the conflict of interest cannot be eliminated because you are transitioning from one avatar to the other. Let's say you are transitioning from a distributor avatar to an RIA. That is where you need to disclose because you might be earning commissions today for that client, but going forward after you sign the client on the IA, essentially, then you cannot further distribute to the client. However, if you may have some historical or legacy commissions, you can still keep earning those commissions, right? And that is something which SEBI has already provided for. Now, there are two types of structures in which an IA can come in. One is a individual structure and one is a non-individual structure, which is known as a body corporate. Okay, so these are two types into which an IA can seek a license. Now, who can become an IA is very important. So there were regulations which were very stiff. Okay, this I'm talking about prior to 17th of December 2024. But post that, the regulations have been relaxed by SEBI to a very large extent. So let me read out a few changes which SEBI has made. So when you become an IA, you essentially are known as a PO or a principal officer. Now that means the principal officer is the main or the head of that particular entity. So as an education and qualification requirement, which is one of the requirement, there are three options you have. Okay, number one option is a professional qualification you can have. You can be a graduate, okay, which has currently been relaxed from a postgraduate. You can definitely be a postgraduate diploma with minimum 2 years in specified disciplines. Option 2 you have, which is the NISM postgraduate program in securities market for investment advisory, which is a 15-month program. And option 3 is a CFA charter from CFA Institute. So these three education and qualification requirements which I have mentioned can help you to apply for an IA license as a PO, which is a principal officer. Now, there are people who also work with us, which are also known as PAI, which is essentially called as persons associated with investment advice. For them also, currently an education requirement is just a graduate. Earlier, it used to be a postgraduate, which was quite stiff. However, SEBI has understood the requirement that there are more PAIs who may enter this industry, and therefore they have relaxed it to a minimum of a graduate. Minimum experience criteria has been removed by SEBI, whether it is principal officer or whether it is a PAI, both has been completely removed, which means you may have an experience. It is good to always have an experience, but it is not mandatory that you have an experience according to the SEBI new regulations. Once this is clear, you go ahead with the registration process. So now the regulator is BSE, which is the Bombay Stock Exchange, and Bombay Stock Exchange mother regulator is SEBI. So you go ahead on the BSE site, you will see an IA and an RA option, under which you will see an IA registration option. You have to go and register yourself. It is quite self-explanatory. They have also provided a helpline which will help you to ask them a few questions, get clarified, and then move ahead with your papers to be submitted to them. The registration fee for individuals is 5,000, and for non-individuals it is 25,000. Non-individuals, I mean, they are body corporates, which could be private limited companies, LLPs. These are essentially called as body corporates. BSE will review, and upon approval, they will grant a RI license or a certificate to you. So these are things when you register. Now, what are the skill sets you really require? Because that becomes the backbone of this whole industry, right? You should have the skill sets and the knowledge which is required. So based on my experience, there are at least 5 things which you should have in as much proportion you can. So one is a good understanding on the financial planning area domain and the investment area domain as well, because that is essentially the DNA and the backbone of the investment advisory in industry. With that also, it's important to understand the regulatory space and the compliance understanding, because being a regulated entity, you are regulated and you have to comply with certain requirements. So it is good to start understanding what are the regulations involved and what do you need to comply. SEBI also is working on simplifying the compliance so that it's easy for people to comply as well. But that's a work in progress, as you know, that as feedbacks go, SEBI is very open to accept certain feedbacks and try to understand the issues in the marketplace, and they also try to make it a bit more easier than what it could be. Third skill you require is client relationship management, which is very important because you are handling an individual or a family, and the relationship with that is important. I'm sure all of you understand the importance of that. Strong analytical and research skills are very important because by and large you're working more on numbers and analytics, and therefore it's very important that you grasp those things, and the communication and the presentation abilities. So these 5 skills which I have mentioned, I think all of this in good proportion will help you to kind of move forward very quickly and paced, kind of setting up and establishing yourself faster in the marketplace. A lot of people ask about the earning potential and revenue models. So the way things have panned out, generally at an entry level RIA, you can expect from 5 to 10 lakhs per annum of income, which is very much possible. There is a lot of demand currently, and based on the demand, I can definitely vouch that a 5 to 10 lakhs bracket, income per annum is quite possible. Once you get established, you could expect anywhere from 25 to 50 lakhs per annum at a minimum level, if I may use that word. So you definitely can expect much more if you are able to kind of, demonstrate your skills better. And then when you are working with certain high net worth clients, as RIA, expect about 1 crore plus per annum, income, because that is a segment also which is definitely looking at an independent advice, but they are very happy to compensate for the advice which an RIA has dispensed. And it definitely has a lot of value because it is independent. The second is about the commission based and the fee based model. So RI essentially is a fee-based model. It's not a commission-based model, and therefore I think that is an era which was there existing for many years. But now I think as we progress, we are moving towards a fee-based model. RI should be earning a fee and definitely not a commission from the same client, because you have to follow something known as a client segregation policy or a rule, which is a SEBI regulation. Essentially what that means, from the same client you cannot earn a commission and a fee, right? And there is a definition of what the client is, what the family is. So when you go through the I regulations 2013, you'll be able to kind of understand what it means. But essentially, primarily to make it simple, from the same client you cannot earn a commission and a fee together. Okay. There are two types of models which SEBI has come out with. One is a fixed fee model, and the second is the AUA fee model. AUA means assets under advice. Assets under advice is always a percentage of the assets, and the fixed fee is a certain absolute amount. Okay, this amount is changed every 3 years. The current amount is about roughly about 1,54,000 plus GST per annum from a client and his family, who is a dependent member family. Okay, the board will give another number after 3 years, which will basically be the maximum fee you can charge on at a fixed fee level. There is also something known as an accredited investor, which has a special privilege which has been given. Accredited investor is already defined under the SEBI regulations. You may want to kind of check that. However, what that essentially means that the accredited investor is fairly evolved investor based on either the income or the assets or both, and therefore the ability to understand the investment landscape is far higher, is what is being believed, and therefore a fee which can be negotiated with the client, provided an accredited certificate is available from, let's for example, a CVL, which issues a certificate to an accredited investor. Based on that certificate, you can then negotiate a fee with the client. At that point of time, a fixed fee limit doesn't apply, nor an AUA based limit applies, right? So you can decide the frequency you wish to charge a client, and it is between you and the client essentially. Please remember, accredited investor, for that I'm repeating, you have to take a separate certificate, without which you cannot get into an agreement with an accredited investor. How much time does it really require for you to stabilize the practice? Typically take about 3 to 5 years, okay, to stabilize your practice, people or your prospective clients to know you. Demonstration of your work, word of mouth, I think becomes very, very important during the process. And a stable client base with a consistent revenue is something all of us are looking forward to. So initial years definitely requires branding. It requires more on the marketing front and establishing your own credibility in the marketplace, because as the market is moving ahead and getting more evolved, I think we will expect more competition, which is healthy, because what also happens is that with competition there is innovation. With innovation there is more value add you can give it to the clients, and clients are also evolving as there is a tectonic shift in the Indian landscape, and therefore clients are definitely asking for a more value-added service, where I think an RIA is well or probably may fit well within that overall scheme of things. Now we have covered about the registration aspect, and secondly about how you need to establish yourself, let's understand a bit on the challenges and the barriers to entry, because that is something very important when you start thinking around it. So one is, I think, mentally preparing yourself that you are getting into it is very important, because it's a kind of a mindset issue a lot of times. So there is definitely compliance, and there is regulatory costs involved with compliance as well, and one has to be prepared for it. So there will be regular audits, there will be reporting requirements which are now established to be every 6 months. There are strict fiduciary standards, because these are often checked during the audits, and the conflict of interest policies have to be very clear. You have to have a very clear segregation in the clients, your RIA model. And the second is, in case you are distributing as a body corporate, your clients have to be different, as I've already kind of mentioned about it. The cost of technology is also, I think one has to take that into account. The legal and the compliance, support what is required. So by and large, this adds up to some cost which is required for you to have an ongoing RIA license and function in a very compliant and a regulated manner. The second important thing which all of us are here is how to acquire clients and how to build trust, because that is the whole foundation on which an RIA is standing upon. And so it becomes extremely important for you to kind of understand that change. And because you don't have a conflict of interest now, you come across as very independent, and therefore, that building up that trust and positioning yourself is very important. So challenges, what we see essentially is definitely convincing clients to pay for advice, because clients might be used to free advice from brokers and banks, and all of us know that there is nothing free, or there is no free lunch. Somebody pays for the advice, and therefore here the client is paying, and sometimes it becomes important for the conversation to happen with the client of how you're shifting gears now towards a more evolved framework under which a client can work with you, understanding there is no conflict of interest, which is a very, very important point, and that you are regulated. Then you are, of course, competing with the traditional distributors and wealth managers in the same space, the banks, etc. More or less, clients find it difficult to differentiate, and that's where it becomes important to have your skills in place, so that you are able to differentiate and demonstrate and create an evidence for the client to start understanding and believing in an independent advice. Some of the strategies which you can use is specialization, where you work on a certain specialized segment in which you are comfortable, where you feel that you can add a lot of value, where you feel the prospective clients is also giving you a good reception. And I think those ingredients are very important. So be it niche advisory, be it HNI, be it NRI, be it ESG investing, it really depends which space you want to play into, or even a general space is fine. It's just that you have to be very clear in terms of what and how are you really going to position yourself in the marketplace. Thought leadership is also very important, because when you write something as blogs, if your name appears in one of the newsprints, media, print media, TV media, even the radio media, etc., I think it creates a lot of credibility at the end of the day. And of course, there could be some referral programs you may have where the clients are giving. Of course, they are loyal, number one. Second, they are also referring you the clients. Nothing like a word of mouth, because that has a borrowed trust, and therefore it works far much more superior in terms of client acquisition, and it's also I think, as compared to many other things, it is still a very, very cheaper option in the way you can acquire great clients to work with. And of course, partnerships with certain professionals, where you may want to kind of refer your client, or they might want to refer their client. So there are different models which you may want based on your strength, your networking today, whatever you may have, which is an asset. Coming now to the competition in the market and the industry trends, I think it is very important to understand that there is a growing investor awareness, and the question is, who is making them aware? The media is making them aware, right? The media has a lot of articles which come. There are certain medias which cover a lot on, RIs, the specializations, the practice, the models, the number of years they have been existing. I think that creates a lot of awareness to people who are well read, okay, and people who wish to acquire uh, much more unbiased understanding from an independent professional, and that's why RI is well suited. There is a lot of regulatory support also, to make sure that this segment grows and more RIs come into the segment as well. So I think this is the right time for people because the relaxations have already happened. Entry barriers have been lowered quite a bit, and it's a golden time for somebody who may want to make a career, going forward. Also, there is a rise in fintech, as you may see, robo-advisory, which is also coming, where a lot of advice is dispensed through a kind of a fintech route. So it is also possible for an RI to work with a fintech at times and get acquainted with it, because finally also 100% fintech, or sometimes it is even hybrid, what you call as between fintech and a human, right? Kind of a mix which happens. And extremely high demand on personalized financial planning. People are realizing more and more the country is growing at a rapid pace. People are evolving. You can see around the way people have experience spending, what I may call, and this is a part of experience spending in a way where they are, hiring independent professionals and they're paying to them. So just like a gym instructor, for instance, right? People pay for a gym instructor today and get the right input. So same, it's exactly, if I may relate to a similar kind of an analogy which I can kind of give you. Very important thing is that a financial planning can only be practiced by an RIA because it has been hard coded into the definition of the financial advice or the investment advice definition in the RIA regulations 2013. So anybody who is doing financial planning outside this may actually be violating the act itself. And therefore it is important to understand that if you are passionate in doing financial planning, it is very important that you go the right way. And of course, you don't want the regulators to come to your door and ask some uncomfortable questions. And therefore, it's very important that this has already been kind of thought through by SEBI, and now it comes under the purview of the investment advisor regulations. Growth opportunities and future outlook, if I may want to cover. Increasing HNI and affluent investors and individuals are growing in the country. Their appetite for unbiased advice is just increasing by the day. There are surge in retail investors post-COVID. Episode has happened. A lot of people have realized the importance of creating wealth, especially at times when things really go uncertain. A lot of financial literacy through media houses, and the role which a media house is actually playing is phenomenal, because once you impart knowledge that, or may rather make the person aware that a financial advice is required and RIs exist, it will make a big difference, because A plus B is equal to C, which means you will automatically see the demand coming in. How do RIs really differentiate themselves? As I have said, it is like hyper personalized financial planning, and people just love it. People like it. People want a customized plan versus a cookie cutter planning, which is done. Specialized in niche areas, clients do reach out, to RIs for this, and unbiased investment advice, which I have mentioned. And I think in the era where the tech and the digital platforms are growing, of course, as I said, the robo advisors are also trying their best. AI is coming in, a lot of efficiency will come into the system as we move forward. As I see this a decade from now, I'm sure a lot of efficiency will come due to AI and robo-advisory tools. And maybe it might be that a human is using those advisory tools to enhance the capabilities and create efficiency and more effectiveness for the client. Then there are digital tools like the CRM. You have to do risk assessments. You have to track the portfolio. So you definitely require a lot of digital, tools which are around you to help you to kind of do things much faster and much more cleaner in a way than it used to be done earlier. And then, of course, you have to market yourself. So there is a social media and content marketing what you do. So it could be on the LinkedIn, it could be YouTube marketing, it could be newsletters. But please remember, there is a BSE advertising guidelines on what you can say and what you cannot say. And therefore, when you are an RI, you are bound by those guidelines, which are drafted by BSE. But earlier than that, it was originally drafted by SEBI, and now BSE takes care of that through their inspection wing. And so you have to take some clearances before you can kind of do those marketing activities. There are a lot of questions in terms of starting a solo, joining an existing RI firm, or building a team. So I think the way I would suggest is as follows: that if you are starting solo, essentially your costs are definitely lower. There is no doubt about it. There is complete independence, and at the same time there is a bit of a high risk because you are starting on your own. You have to kind of wet your feet. As you move forward, you kind of understand the nuances of how things work. It might take a time. There is a bit of a risk there, right? Unless you are a quick learner. The other possibility is joining a RI firm, because that is where you actually understand the mechanics of running an investment advisory firm, what is required, and things get to a much more practical aspect. You start thinking much more realistically, and if you have an entrepreneurial mind, you will definitely start a firm of your own. If you don't have an entrepreneurial mind, which is also okay, you can actually rise within the firm, right, at even senior levels if you can lead properly. So I think there are a lot of options you have to build a career, and then of course building a team which to scale as you move forward. The more popular you get, the more clients come to you. The more clients come to you, the more team members you require, who are competent members who can help you and kind of unburden you in the process. This also requires managerial expertise. It requires your own capital, and therefore though capital requirement has been reduced by SEBI, I personally feel that it is important to start something with some decent capital with you, so that you can fund certain key initiatives which will help you to grow faster, rather than it taking a long time, because time should be on your side, and that's very important. So my suggestion is that as soon as possible, if you can get your feet up, on the streets, and you are known, I think nothing of that can beat then. Who should be considering this career? It's a very interesting question, and many times I have seen this question coming from many people. So I think ideal will be somebody who is passionate for financial markets and advisory overall, and somebody who likes to teach, somebody who likes to impart knowledge, having a strong ethical and a client-centric focus, inbuilt, will go a long way. And of course, entrepreneurial mindset, if you want to start a business of your own, will be very critical to have for the business growth. Some mistakes I think you should know a lot of RIAs do in the process is that they start underpricing their services or offering a free advice. Okay, offering a free advice anyway is not allowed in the regulation, but underpricing doesn't help, because if you are competing on price versus quality, you will hit the roadblock very soon, and it then becomes very difficult for you to change the avatar. So when you are starting, you start with some positioning where you don't undercut or underprice your services and to attract clients more. That doesn't help in the long run. lack of focus on the client relationships, because one bad word going out can actually destruct the brand a lot. So you have to be very careful when you acquire clients, and when you acquire clients, you have to be able to maintain the clients. So in pursuit of having new clients, if you start ignoring your present clients, it can do a lot of damage to your brand overall. Then ignoring compliance, not taking it seriously, not taking the documentation part seriously. I think these are things which are just a strict no, because the regulators are catching up very fast. It's very likely that they may come and audit, and at that point of time, if you don't have proper compliance systems in place, if you have not done things in a hurry, it might lead to a position where it can disrupt or derail your practice for a while till you get those things in order. It may also be penalized at times, and I think these are things which one should not do while growing. One has to be extremely conscious of the fact that there is a regulator. We are in a regulated space. We are working with the clients, and the regulator wants you to definitely wants to make sure that you are doing the right thing in the marketplace. What will be differentiating you as a top performing RI is also very important to understand. When you are having a client, a continuous education to the client and empowering the client is very, very critical. I think in the overall scheme of things, it goes a long way. It goes a long way because you are imparting somebody a knowledge, and that person feels much more empowered. So the more you empower, I think that's a great way to differentiate. Continuous learning yourself and staying updated on the regulations is very important. So we have an association known as the Association of Registered Investment Advisors, known as ARIA, which essentially is a Section 8 company and works with the regulators very closely. I myself, I'm the founder board member of ARIA, and I can tell you for sure that the amount of ecosystem created by ARIA is phenomenal, because the minute you start thinking about coming into an RI landscape, it's good to get in touch with ARIA, kind of understand, even attend some RI clinics for you to understand the nuances of how to practice. Thirdly, you have a whole ecosystem of people around you who help you, right? So there are groups where there are a lot of communication to and fro happening, and I think those things are very, very critical, because you shouldn't be alone in the ecosystem, right? You should have people around, and that's exactly a gap which ARIA fills together. Of course, ARIA works with the regulator on the regulations, give them feedback, help the regulations to be amended, modified, improved, lowered, keeping in mind that you need to have the right conduct in the marketplace. And I think it's very important to kind of get those elements right, those ingredients right, on which the whole community grows. And if we have the right people in the community, it goes a long way in increasing the RI brand itself. A lot of people will come to us because of the RI brand what we have. Individually, we will have our own differentiations and practices what we will definitely have. But I'm sure, I think this will help you to kind of gather of what an RI is, and we covered about what a kind of a SEBI RI means, who can become a SEBI RI, what is the minimum education qualification required. Very important is the certification requirements, which also are required when you are coming as an kind of a first time RIA, is NISM 10810B, which is also mandatory. So when you have education and qualification requirement, you also need to have a certification requirement, which is the NISM 10810B. Once you clear, then you can kind of go ahead and file your papers with BSc for your RI license. So hope I have covered most of the questions. Do come to us on a regular basis. And the idea of making this particular video was also to help people like you to kind of get the whole to-do or the know-how faster, so that you are able to kind of catch up very fast and take your second step ahead and the third step ahead till the point of you file your papers as an RI. So thank you very much, and I hope you've kind of liked this video. Thanks to Equalify to give this opportunity to me to impart this knowledge to all of you, and I hope to see you as RIs very soon. Thank you very much.